And there is a concern, given that WeWork is technically the largest tenant in New York City, largest tenant in London, whether it could actually have a real downdraft on the price of commercial real estate in terms of office space in these big cities.
Right. So let's start, I think, with the WeWork's business itself, right? Because fundamentally, its core business, right, is sort of on track. I mean, people are living, working, playing, staying differently, and they actually had recognized that and began to build office spaces that create that sense of community, that were highly curated. Companies were actually looking for flexibility, so flexible office space, shorter-term leases is something that was appealing, and being able to have one-stop procurement was appealing. So the business itself, there's demand. The question now is WeWork's at this critical juncture, and as Leslie said, is there confidence in them moving forward? I think they're trying to take the right steps. If I look at what they're doing in terms of putting 2 new co-CEOs in place.
You like them?
I think they're doing the right things. I like their core business. I mean, obviously, they went off. When you had a business that was working, and they tried to expand too quickly. And the other thing that's really important is it's a really capital-intensive and operationally intensive business, and it's very hard to try to expand the scale they did and get into schools and this network effect.
If you're a landlord today, would you rent to these people? That's actually a fundamental question in terms of their ability to continue to grow the business. And this is a grow or die business based on the economics of the way they're currently structured.
So if WeWork today needs to pull back, I think WeWork needs to shed non-core businesses, slow down their growth, regroup, refocus on their core. I think those are the steps they're taking.
But they have to grow the core, otherwise they're going to pay off the rest of them.
I think Leslie said they need to regain the confidence of their customers. Now, WeWork's in 2 businesses, right? WeWork's in the core business is in the co-working space, and then they're also in the enterprise space. The enterprise space, which is about 45% of their business, is backed by companies like Bank of America, JP Morgan. They're the ultimate tenant in those spaces. So I think, they need the confidence that they can continue to fill that space with them.
How much do you care the talent is going to the extent you think there is talent there, is going to walk out the door? And by the way, the talent that works for WeWork is a very different type. These are people historically who didn't really want to be in the real estate business, were attracted by the sort of sex appeal of what this company was supposed to be, the idea of an IPO. I mean, there was a lot of things going on, and there's a lot of people there now who are saying, I need to run for the exits. I am tarred by Adam Neumann. Tarred is the word they talk. They actually think that, and so they're going to run for the hills. What does that do to the whole franchise?
So listen, they've kept 2 co-CEOs that are very capable. They're making the tough decisions. I think the critical point right now is the capital side. They've got to be able to validate to the marketplace that they have the capital to get their business to the point where it can have a path to profitability.
Do you think that they can get out of some of these leases? That there's questions. I don't know. Maybe you understand the structure of it better than I do in terms of how WeWork is set up, such that there are various organizations that effectively could file their own bankruptcies without necessarily hitting the core?
The one area that WeWork was disciplined on from the very beginning was actually not putting up their balance sheet on fully guaranteeing leases. So most of WeWork's leases are either off of subsidiary entities that have short-term guarantees that burn off. So, for example, if they're a tenant for 18 months, after 18 months, there's no guarantee.
So what landlord in the world is going to continue to allow that to happen in the future?
No, I think that won't happen, and I think that's already started to shift out of the marketplace. Most landlords are starting to move into more of the managed lease agreements. So like when we do a deal, we're signing managed lease agreements where we're putting in capital, we're actually sharing in the revenue upside and not having to rely on their guarantee. We're relying on underlying business.
Is there systemic risk here or not? And we talk about how they're the biggest tenant in places like New York and London, but somebody pointed out to me the other day that there's still only 1% of the commercial real estate in New York City. So is that systemic or not?
The whole flexible office space is 3.5%, of New York City. So I think the systemic risk is a good question. When you think about the scale, very small. The enterprise space, as I mentioned, it's 45% of their business. So take our lease that we have at WeWork. It's 100,000 square feet. Bank of America is on that is the tenant in that space. They occupy another 10 floors. They're not leaving that space if WeWork leaves. So I think if you pull that out of the equation, there's some stability. Where you're going to have the issues is the absorption. They've been growing and absorbing a lot of the space that's come onto the market.
So maybe it cuts down on potential increases down the road.
And particularly Class B space.
What does this do to valuation of these other businesses that are trying to be WeWork business? I'm thinking the Wing, which might, their stake might. Does that? And what's the valuation of the Wing these days?
$500 million.
$500 million. I thought it might have actually been a unicorn.
Yeah, well, only half.
But the question is, does a business like that still get that kind of valuation? Do all these other guys, are they now going down or are they going up?
So you know, I'm an investor in a company called Convene, which is somewhat of a competitor with WeWork, although it does also meeting spaces as well, which is the base of their business. But you know, when you sit in our boardroom, you know, there's a clear path of what are the four-wall economics for each of the centers that they open. And you know, what are those return on equity on that economics? What's the return of capital on that economics? And what's the path to profitability? I don't think anyone really ever believed the valuation that WeWork, or invested in the valuation that was being applied to WeWork. And I think that's what's part of the problem, right? WeWork was being pushed by this valuation to go expand into other businesses to try to justify a network effect in a capital-intensive, operationally intensive business that is really, really difficult. You know, this is not Airbnb.
Could that also be part of the solution, though, in terms of kind of a moral hazard situation where people who are potentially losing confidence in WeWork could turn around and say, well, but SoftBank has so much at stake here. Maybe they will help keep this thing afloat. So
I would be very surprised if SoftBank and the other investors don't put together a capital plan that keeps WeWork afloat, gives people confidence, and gives the management team a chance to turn the business around.
Okay.